Today I want to talk about Alibaba. We'll go over a surprising recent investment in South Korea. We'll also discuss some recent comments from the CFO of HSBC on China's economy. And finally, we'll take a look at Alibaba's valuation as well as where analyst price targets are currently sitting at. So if you enjoyed the video, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. Alibaba is a stock that has been trading in a range over the course of the last couple of years. We can see that over the last 6 months, the stock is down over 15%. And in just the last year, the stock is down around 10%. If we zoom out over the last 5 years, down about 60%. However, from 2022 till now, the stock has kind of traded sideways in a range of anywhere from $60 all the way up to $100. Oftentimes when you see a stock that has fallen this much, you often start to think that there's something wrong with the underlying business. However, a lot of what Alibaba has gone through over the course of the last 5 years has been out of their control. They have had the pandemic that has struck China very, very hard. They have had weakness in the Chinese economy. They have also had delisting concerns from the US and a number of other issues that have been outside of their control, like the Chinese government implementing a lot of fines against Alibaba. And this has led to the stock falling in a massive way. At one point, Alibaba's stock price was over $300 and now it is under $100. Fundamentally, over the course of the last 5 years, their business has improved quite significantly. We could see that back in 2018, they were bringing in a top line revenue number of around $53.1 billion. Today, that number has grown all the way up to around $130.5 billion. Net income doesn't show as strong of a growth trend as their top line revenue numbers. However, we could see back in 2018, their trailing 12-month net income was sitting around $10.7 billion. Here today, that number has grown to around $13.8 billion. However, it's still down quite significantly from 2020 and 2021, where they were sitting around $23 billion of trailing 12-month net income. However, they are still looking for ways to grow the business. Alibaba has recently made a $1.1 billion investment in South Korea. And the reason I find this a little bit surprising is because China tends to actually support North Korea more than South Korea. And this has been something that the US and China have had division on in the past. However, I think that it's interesting that Alibaba made this investment because Alibaba has been working closer with the Chinese government to try and get on their good side. And we've seen that reflected with Jack Ma actually returning to the country. And I'm wondering if Alibaba making this investment in South Korea is to try and improve some politics between the US and China. Not only could this be a political move, it's also going to have an impact on Alibaba's business. They have focused a lot on Southeast Asia, countries like Vietnam, and growing their business within those areas. And I think they're looking to expand to more modern economies like those of South Korea. And they're showing this with a $200 million investment into logistics in the area, as well as $100 million into small and mid-sized firms. And overall, I think this is a smart move from Alibaba. When we looked at their most recent earnings report in the last video that we did on Alibaba, we noticed that their growth within China had slowed down significantly. This coincides with the economy within China slowing down. However, the rest of Asia, their market has grown more significantly and at a quicker pace. So this is probably a means for Alibaba to focus on that growth that is outside of China to help kind of stabilize the business. Even with the stagnant growth in China that Alibaba is experiencing, HSBC's CFO has a very positive outlook on the Chinese economy. When he looks at the slowing growth of the Chinese economy, he sees three main sectors that are affecting it, and those are real estate, infrastructure, and exports. And exports have been key to China's growth. Over the course of the last 15 to 20 years, China has been a target of a lot of large companies, especially US-based companies, for manufacturing. And that has changed over the course of the last 5 to 10 years, as a lot of these companies have looked to diversify their manufacturing away from China and into countries like India. And this is why the CFO sees this time period as a very important time for China to mature as an economy. If they can focus and become more heavily reliant on consumers, as well as the service industry and high value and sustainability driven products, they can really start to transition away from being so reliant on exports and more being self-sufficient within their own economy. And luckily, the Chinese government really understands that this is a transition that countries, especially in Western economies, have gone through over the course of time, and that they are starting to hit this period. So they have focused a lot of reinvestment back into service industries within China China to keep their economy moving forward. China also looks to improve their real estate industry by lowering interest rates. They are one of the few countries that over the course of the pandemic did not drop their interest rates in a very dramatic fashion. They still have room to be able to move their interest rates down and hopefully help instill some growth into the real estate industry. And with the weakness we have seen in China, Alibaba as a stock has fallen in a major way, and this has allowed for their valuation to drop significantly as well. They're currently sitting at a forward P ratio of about an 8.05, and we can see over the course of the last year, they've ranged anywhere from around a 7.6 forward P ratio all the way up to an 11.17 forward P ratio. A lot of this valuation has to do with skepticism around China and where their economy is headed, but also Alibaba has slowed down in terms of their growth. Top line numbers have only been growing in the single digits over the course of the last few quarters, and we saw a few quarters of negative growth back in 2023 and 2022. And as we mentioned earlier, net income has basically been flat over the last 5 years and down over the last 3 years. However, analysts are expecting some growth to come back into the company over the course of the next 2 years. We could see that for EPS, their estimate for 2024 is $8.74, which is over a dollar increase from a year ago of $7.64. And in 2025, they expect this growth to kind of flatline to $8.78. And over the course of the next 2 years, analysts are expecting top-line revenue numbers to grow slightly more than previous years, sitting around 7.4% growth in 2024 and 7.9% growth in 2025. I'd really love to see these numbers get back into double digits. Anywhere from 10 to 15% would be amazing growth for Alibaba. And currently, analysts have an average price target of $109.28, with a low price target of $79.91 and a high price target of $145.84. And I think these are easily achievable. I could see them hitting this $110, but I also could see them hitting $145. If we see a sentiment change as well as some strength in the Chinese economy, I think there could be an influx of investors looking to China and looking to these low valuation companies and putting money into those stocks. So keep in mind, I do own shares of Alibaba, and I like the company for the long term, especially because the valuation right now is so low. I think that over the course of the next 2 to 3 to 5 years, we're going to see growth come back into China, especially in their tech sectors, which I believe Alibaba is one of the front runners in. With their cloud business being the largest in China, I think that once cloud becomes more prevalent in China, that they are going to see a lot more success in this industry and see a lot more growth. But that is just my opinion. Do not buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to hit that sub button. And as always, guys, have a wonderful rest of your day.